Hello everyone, this is Sebastian McMahon from IA Financial Group and I'm back with the weekly economic review for the week ending October 10th, 2025. The title of the review this week is Getting the Wheel to Spin Again. I'm talking about investment from the private sector in Canada. This is the big if. This is the target of the federal government in the next federal budget, which will be out on November 4th. If we want the Build Canada plan to work, we need to have investments from the private sector. And so far, confidence seems low and the trend is pretty much sideways. So we'll dig into that in a few minutes. But before we go there, we'll take a look at this week's markets at the close on Thursday. So negative for bonds, positive for stocks. TSX was lagging a little bit, but year to date, it's still the leaders of the race are the emerging markets and the TSX in Canadian dollars. If we look at the other asset classes, gold still pretty much at the bottom of its trading range, near $60. There was a rebound of the USD this week against pretty much all the major currencies. So CAD lower, Euro lower. It's hard to call a sharp turnaround in the trend for the USD. It seems that while we don't have much data, there's some uncertainty. It seems that the USD is returning as a safe haven. At least this is how we explain it for now. We'll see over the next few weeks if the trend continues, but we are still firmly in the camp that the USD should be moving lower over the next months, the next few quarters. So we think this is mostly a blip here on the radar. And the price of gold up 2.3% this week, quite some volatility when you look at the daily price action, but we are now above 50% return year to date, so a solid year for gold. If you've been in that trade for a good while, it's always a good idea to take some profits, but we still think that there could be some legs to that trade if you stay within the trade for the long run. But again, it's always a good idea to take some profits along the way. That doesn't mean that you need to stay invested fully all the way through that trend. So for the Canadian economy now, let's start with the labor market. The labor market jolts back to life. This is quite a volatile data series, the net change in employment series in Canada. The last 2 months, we had a cumulative loss of about 100,000 jobs in the country, and we just rebounded by 60,000. You always need to take this data with a grain of salt. Likely the last 2 months were not as bad as it looked, and this month likely is not as good as it looks. You need to look at the trend, and you do see a trend of a slowing labor market in Canada. Now, what's at stake here? We were expecting the self-employed category, which weighed quite a bit last month, to drive the market, the rebound here of the labor market. It wasn't that. It was mostly full-time jobs, so there's a positive here. It was a contribution from the public and the private sector and goods-producing sector, so it was a mix of multiple things. So maybe we could see that as a slightly bullish or positive, but the trend still confirms that the Bank of Canada is likely to cut at least once, or maybe once by the end of the year. I don't want to say at least once. If we end the year at about 2.25%, that would just give us a good handoff for 2026. So this is still supported by the trend in the labor market, but we'll see how the bank reacts to that in its coming communications and its decision that is coming up at the end of this month. Now, the federal budget, we had some interesting news on Monday. Two things. First, there's going to be a change in the accounting protocol in the Canadian government. Now they will be reporting investments or any spending from the federal government that is directed at propping up investment in the country, whether it's the federal government itself or transfers to provinces to invest, or any kind of incentive for businesses to invest as well. So all of these will be categorized differently in the table. So that does open the door for creative accounting from the federal government, because they will be the ones deciding what is categorized as an investment and not. So it's at their discretion. So we'll see how the table shapes up and how it's received by the public. but we're also moving now to a fall budget cycle rather than in the spring. So you cannot be against the principles here. Having a budget in the fall gives clarity to provinces for their own budgets, which are published in the fall or in the winter or the spring. And also it gives more clarity, let's say, to the business sector on the construction side, where the cycle kind of starts at the end of the winter and in spring. So principles are not make sense, but we'll see how it turns out on November 4th. So still keeping our reserving our opinion now. But when you look at the data here, the series that you see here is the business investment for non-residential structures, machinery, and equipment. And what you can see here, and this is all in real dollars, so it's the quantity. So you take out inflation. You can see there seems to historically there's been a trend higher, keeping up with GDP for investment, but over the last 10 years, pretty much sideways. So as a share of GDP, this has been going down. So there's a lack of investment in the country, and everyone acknowledges that we need to do something about this. Now, can the government get the needle moving? Well, next slide here. Bank of Canada's Business Outlook Survey. On the left, you have the balance of opinion, which is solidly negative now, that even in recessionary levels. And on the right, you have the future investments in machinery and equipment. This is the intention to invest from businesses. It's pretty much neutral here. So can the federal government get businesses to want to invest more? This is the key. If it works, we could have a very solid tailwind for the Canadian economy moving forward, but it's a tall order. So again, this is where our focus will be set for the next federal budget. For now, we have no clue if it's going to work, but it seems that businesses are not in the mood to invest now, so this needs to change. So what we'll be watching next week in Canada, we'll have the CFIB Business Barometer data. We'll have the manufacturing sales as well, so two very important data points given where we are in the Canadian business cycle. And in the US, NFIB Small Business Optimism, we know we'll get that because it's private data, but CPI inflation and retail sales, both produced by the federal government, they are on the calendar. We likely won't get them because of the shutdown. And even if the shutdown ended today, the time just to gather the data and to process it and release it, likely it would be delayed. But for the CPI inflation, we've learned this morning that some furloughed employees will be brought back to produce these. This will be released this month, but likely not next week, likely more at the end of the month, because this is a very important data series for the indexation of social security payments in the US, so they need that. So we will not be going blind with inflation forever. By the end of this month, we should have a CPI inflation data, but likely not next week. So that wraps it up for the week. Always a pleasure to serve you. If you appreciate the content, please share, and of course, come back next week.